But the price action in Asian FX also reflects other key dynamics beyond just economic fundamentals. For example, North Asian currencies like the Taiwan dollar, South Korean won, and Singapore dollar have shown strong performance, particularly after the US tariff announcements. This seems to highlight that the influence of trade and financial flows rather than just direct impact of slower global growth.
This is Converge,
a podcast from Convera.
Come with us as we shape the future of finance.
Hello and welcome to the Converge Podcast. I'm your host, Steven Dooley, Head of Market Insights here at Convera. And joining me to discuss the major developments moving currencies this week is Convera's lead FX and global macro strategist, Shier Lee. Now, Shier Lee, historic moves in Asian currencies this week, particularly with the Taiwanese dollar, have sparked speculation of a potential regional FX accord being negotiated with the US as part of trade talks. What's your take on these outsized currency moves and the implications for the broader FX market?
Well, thanks, Steven. The sheer magnitude and breadth of the currency appreciation we saw in Asia at the end of last week, led by historic 3.8% one-day surge in the Taiwan dollar and 5.5% weekly gain, was remarkable. These moves have sparked significant market speculation about the driving forces behind them. While there has been no official confirmation of any coordinated policy or agreement, several key drivers appear to be contributing to these outsized moves in Asian FX markets. The first point I'll highlight is the performance of North Asian currencies like the Taiwan dollar, South Korean won, and Singapore dollar has been robust, likely reflecting patterns in trade and financial flows. And this contrasts with the more domestic-oriented South Asian currencies like the Indian rupee and Indonesian rupiah, which have lagged. Second, I would say the sharp influx of foreign equity flows into Taiwan, totaling US dollar 1.2 billion last Friday, may have further boosted the Taiwan dollar. Additionally, the significant asset liability mismatches faced by Taiwan's life insurance companies, where a large share of assets are in US dollars and liabilities in Taiwanese dollars, are driving hedging demand. And finally, the third point, I would say, the executive yuan of Taiwan confirmed that the first round of tariff consultations with the US was completed on May 1st, which may have improved the sentiment. In addition, a weakening US dollar and improved liquidity conditions likely supported broader gains across Asian FX. It is worth noting that these moves occurred during a period of thin liquidity due to public holidays in several Asian countries, which may have amplified the scale of the currency movements. While markets are exploring these possibilities, it is important to emphasize that there is no evidence of official policy action or intervention driving these moves.
Interesting, thank you. So, look, there's been a big move. If Asian currencies continue to rally, what are the key implications that you see for major G10 currencies like the euro and like the yen?
Yeah, good question. So for the euro, the recent weakness in the US dollar, driven in part by Asian FX strength, is a positive development. We do continue to see upside potential for the euro US dollar, and the euro benefits from two main channels. One, on the FX side, the broader dollar weakness reduces the trade-weighted constraints on euro US dollar appreciation. And second, on the macro side, stronger growth prospects in Asia, supported by these FX moves, could have positive spillover effects for the euro area. For the yen, the picture is slightly different. If trade tensions ease further, we could see some unwinding of haven demand for the yen, leading to short-term underperformance versus more cyclical currencies. US dollar yen may experience a short-term squeeze higher as investors adjust their positions. But we do expect it to trend lower over the medium term, consistent with the overarching dollar downtrend.
Okay, thank you. So what about the commodity currencies? The Australian dollar, for example, how are they being impacted by these moves that we're seeing in Asia FX?
Yeah, one of my favorite currencies, the Australian dollar, stands out as a key beneficiary. It has one of the highest correlations with Asian FX, particularly the Chinese yuan. The combination of broader US dollar weakness, reduced trade uncertainty, and improving sentiment in Asia could support further gains in the Australian dollar. For South Asian FX, the recent decline in oil prices is a positive development for energy importers like India and Indonesia. And this should reduce the downside risk for their currencies and allow them to participate more in the broader Asia FX uptrend.
Of course, we saw the Aussie-US trading above 65 this week for the first time since early December last year. Now, I guess thinking about these trade stories that are the big driver of what we've seen throughout FX markets so far in 2025, now, how does that relate back to the moves that we saw in 2018 and 2019, that trade war playbook that we saw during that first clear US-China trade war? Can you expand a bit on how the FX markets behaved back then as the US and China, de-escalated tensions in 2019?
Yeah, certainly. So while the macro backdrop in 2025 differs from 2019, there are parallels worth noting. During the 2019 US-China trade negotiations, we saw high beta currencies, particularly in emerging Asia, outperform as trade tensions eased. Currencies like the Taiwan dollar, Korean won, and Thai baht were among the top performers, while haven currencies like the yen and US dollar lagged. And this template suggests that if we see further de-escalation in trade tensions, high beta currencies could continue to outperform. However, this remains contingent on broader macroeconomic developments and trade-related news.
So, just stepping away from FX for a moment, what's the outlook now for you across Asia? What are your views?
Yeah, sure. So a few key takeaways from my personal opinion. One, for India, inflation is expected to remain below the Reserve Bank of India's 4% target this year, largely due to lower food prices. However, we still anticipate further rate cuts from the RBI to support growth. In Taiwan, the government faces a fiscal paradox: strong revenue generation, but limited budget flexibility, which constrains its ability to provide counter-cyclical stimulus. Power prices are expected to remain stable this year, supported by subsidies. It's also worth noting that the region faces structural headwinds, including the indirect impact of China's growth moderation. Despite this, the broader expectation is for continued US dollar weakness, which could provide some support for Asian currencies over the medium term.
So, economic forecasts have been revised lower for most of Asia as a result of these trade and tariff worries, but it seems like that in these economies, the domestic policy response is also starting to come through and buffer some of those trade hits. What's your take about how these growth challenges intersect with the currency moves that we've seen?
Well, that's a great point, Steven. When we look at the recent developments, it's clear that the context of slower growth in the region is important, but the price action in Asian FX also reflects other key dynamics beyond just economic fundamentals. For example, North Asian currencies like the Taiwan dollar, South Korean won, and Singapore dollar have shown strong performance, particularly after the US tariff announcements. This seems to highlight that the influence of trade and financial flows rather than just direct impact of slower global growth. In Taiwan specifically, we've seen a sharp influx of foreign equity inflows, about 1.2 billion in one day alone, which has supported the currency. At the same time, there are structural factors like hedging demand from Taiwan's life insurance companies that manage assets in US dollars but have liabilities in local currency, such as the Taiwan dollar. Additionally, speculative flows and exporter-driven dollar conversions may have played a role as well, especially given thin liquidity conditions due to public holidays across several Asian markets. And these technical factors are likely amplified the moves. Now, looking at a broader picture, the US dollar has been weakening, and this trend appears to be influencing Asian FX performance as well. Many corporates in the region may also be adjusting their FX hedging strategies, potentially leading to a larger flows into local currencies. So while slower growth and tariffs are undoubtedly headwinds, the recent currency moves highlight that other drivers like financial flows, hedging dynamics, and liquidity effects are also shaping the market's narrative. And it'd be really interesting to see how these factors evolve moving forward.
Great insights. Thank you very much, Shier Lee. Really appreciate you coming on to the podcast today, and look forward to speaking to you again soon. Thank you.
Always a pleasure, Steven.